Hello traders, welcome to another video. So as promised, right, I promised to be showing you an upgrade to this strategy in the upcoming video. So in this video, I'm going to be showing you the upgrade, right? So this update is all about major and minor inducement and where to use major inducement and where you can look to use minor inducement. So I believe that this update is going to improve on your trading and increase your win rate in the forex market if you happen to learn and put this into perfect practice. So without wasting any of your time, let's go straight into the video. Identify minor and major inducement as we first used to do in at first, right, before this upgrade. So at first we used to consider an inducement minor when it's an internal pullback, right? Let's say we have a pullback like this, and after the market stops this pullback here, it goes up and creates another pullback. So at first we'll say this is our major pullback, which if we are marking price, this will be our major inducement, right? So that was how we used to identify major inducement, and then this will be now our minor inducement. But recently this is no longer how it is, right? This is no longer how it was. So when we used to mark like this, here, right, after the market has taken out, for example, your main inducement here, right, we used to map this as our break of structure. So since this was our break of structure here, we look from the up, from this move, from currently where price is, we look downward, right? The first low, it's where we are marking it as our inducement. So we never care to know if this was a minor or a major inducement. So now what is the difference between now, the upgrade now and then? This is then. Let me show you now, right? So for now, what we consider now as inducement is when, as major inducement is when price, like price creates, if price creates a pullback like this one here, that will be our major inducement. Then if price happens to take out this major inducement, right, it's going back to create another boss. We have other moves like this. So now if price goes back to create a break of structure here like this, everything inside this range everything inside this range is a minor inducement. Only if you are considering an inducement for a major inducement, it's only an inducement that occur after the break of structure, right? So now starting from this high, right, you spot the first pullback, which will be this one in this case. So this will be our major inducement here. Now bear with me that if this pullback was not here, right, let's say that pullback never existed like that. Now the only pullback that is above this break of structure, right, the first pullback above this break of structure will be this one, which will be our inducement. So here this will be our major inducement at this point. Then we don't have a minor inducement here, right? Since we already have a major inducement, we have just only one pullback can be in this, only one inducement can be in this range. So this is our major inducement. Now let me show you example of a minor inducement. So let's say we have the market pushing up like this, the market takes out the pullback, and we have a move like this, right? So now we have a valid break of structure here, and we also have, that means the market has taken out this inducement here. So with this valid break of structure here, if you look from down, you see that all the pullbacks that you have, right, the first pullback that you have, it occurred within this range, within this trading range here. So this pullback now become a minor inducement like this, right? This is our minor inducement. Now what does a minor inducement signify, and what does major inducement signify? If you have a minor inducement, right, it's the probability of that trade is small. It doesn't mean that it doesn't work, right? The probability of that trade is small. So what can I use minor inducement for? It's advisable that you use major inducement if you are entering into trades, but if you are marking structure, you can use the minor inducement, right? You can use this as your minor inducement to validate your next break of structure to the upside and all the like. So far we have shown you only the bullish scenarios, right? Let's go over to the bearish scenarios. Let's say I have a market that is pushing down like this. The market leaves me an inducement, then later comes take out the inducement and goes ahead to break structure to the downside. So now here at this level, we have our new break of structure at this level. So we label that break of structure obviously, and then we have our inducement. So now this break of structure was only possible because inducement was taken out. Now in this case, right, this will be our major inducement. Now where is our minor inducement? After this break of structure, if you look downward, right, starting from where the line of the break of structure is marked, anything below above this line of break of structure to this high is called a minor inducement, right? Any move that occurs there. So this will be our minor inducement. So here, since we have a minor inducement, where will our major inducement be? Our major inducement now becomes this high. This high is will be our major inducement here. In a case where you have just one inducement, right, which is a minor inducement, the main high is going to become your major inducement. So there are high possibilities that the market will want to come back, violate this major inducement, this minor inducement here, come right to the major inducement, take it out, and then sell. Now, actually, there are two possibilities of you using this here, right? So the way the market would like to take this inducement here can be by a sweep. So if you notice a sweep of this major inducement here, then you can look to take a trade to the opposite direction. But if the market also closes above this zone here, this will also be valid as a change of character. So that is why I told you this will be a little bit more complicated than the previous updates you have come through, right? So if you look here, this is our major inducement. This is our minor inducement in this case. But if the market just happens to come and take out just this minor inducement and goes ahead to create the next break of structure like this, then you can validate, you can mark this as your next break of structure, and your trading range will normally switch, right? If once you have a break of structure, your trading range now normally switches. So now your trading range is now from this high to the current market low. So that is why I told you you can use this to validate, to mark the next break of structure. But you should know that with major inducement, the probability of the trade is higher as compared to minor inducement. This is a major inducement here. This pullback started after this break of structure here. So this is a major inducement. And if I have a point of interest here, right, the probability of me winning in this trade is a lot higher as compared to the minor inducement. So looking at that, that is how that is the update for you guys. Now let's go into the chart and spot that in real time, right? We spot that in real time. Let's start from here, right? Let's start after this break of structure here. Now you can see that this break of structure occurred after taking out an inducement here. This break of structure here occurred after taking out an inducement right down here, right? This is where the inducement is. Now this inducement here, it's a minor inducement. This is a minor inducement because it was formed before this zone, before this break here. So it's inside this zone. So this becomes our minor. Okay, guys, so this is the bearish example, right? So from here, you can clearly see that the market direction is bearish, right? Just by looking at it, you can already determine that this market direction is bearish. So starting from this, if you start marking our structure from here, right? If you start from here, we look upward, you can see that the market has already taken out this pullback here. Now, this is our major inducement. So this is our major inducement here, right? So the reason why this is our major inducement is because this is our first pullback and it's not inside another pullback here. So now after the market has taken out this our major inducement, it has gone ahead to give us a break of structure here. This is a break of structure here, and that was our major inducement, right? For now, I will not be differentiating between these two, but I will be telling you which one is which one. So after this major inducement, right, if you look at it from the next zone here, you see that we have no minor inducement in this case, right? So from here, if I look upward, I can see that the next major inducement is this one here. This is my major inducement. So once the market takes out my major inducement, I am good to sell. I am good to look. I can start looking for a good position to enter my trade, right? Like I said, the trades that involve major inducement have high probabilities of playing out, unlike the ones that involve minor inducement. So you can see that from here we had some sort of SOB, right? So that was a sweep entry model, and you could have gotten the trade, or you could have still gotten it right up here. So in this case now, we are marking this structure using our major inducement, right? Because that is what price offers us. Now, if we come down here, we can see that from here now, we have what we call, this is our inducement here. This is our inducement. This is the high of our inducement. Now, the market has taken out this inducement and gone ahead to create a break of structure here. So now, after creating this break of structure, we don't have any valid inducement here. So this high now becomes our inducement as we are using this time frame. So this high becomes our inducement. So that is how we mark out inducement. So now let's say we come back here, right? Let's say we had a break of structure here. This is a break of structure, but it's not valid on this time frame. I mark this structure using a 30 minutes time frame. So let's say we had a break of structure here, and the market was somewhere around here, right? So this will be our minor